Today is April 24, and Meta will be reporting earnings in about 2 days. That's April 26, and you'll see today it was basically flat. And so if you haven't watched our video on Meta, we've been tracking the unusual options to see what direction earnings could be going towards. So we'll put that link in the description and also at the end of this video. So without further ado, let's look at the unusual options for April 24. So the biggest and most significant one we saw was this 123 at the 55-second mark. You'll see here the April 28th here, this 260 strike calls and 265 strike calls. This is 8,000. This says 5,800. However, if you look down here, actually down here, it's actually 1,200. There's actually some more. So you got to add this 1,200 to that 5,800 to get 7,000. So this 265 strike calls is actually done also same time, 123 at the 55 seconds. Also these right here, these other two here. So it's a four-legged option trade. So these are also the same trade here. So we're going to analyze this trade very carefully to see what this means. It was about a $3.5 million trade that was put on. So again, there are some other options such as this one here, the 215 strike calls and puts for the May 19th and the 205 strike puts and calls. However, when we look at these May 19th here, you'll see that the volume over here and here is all less than the open interest. So we'll have to check on that tomorrow to see if they were open orders or not. Same here and same here on the call side. So let's just take a look at that more significant one and analyze this one, because this was the major one. And as we get more data, and we'll be able to have a better picture of what these other synthetic trades meant. Okay, so for this one is actually expiring in 4 days. So this is definitely an earnings trade. If we go down to the strike prices too, you'll see that it was the 245s, which is over here, and the volume here is also slightly more than the open interest, right? So this 245, and then you got the 255 here. This one was more than the open interest of volume. So that one is an open order. However, this was only 1,800. So it's possible actually of a closing order. So you can't always just compare the numbers. You have to look at what was the actual trade. That was an 1,800, but this open interest here is also 1,800. So it could have closed off this 1,800. So we'll have to look at this data tomorrow to see what's different about it to determine that. For the 260s here, this is less than the open interest, and this one here is also less. So these could also be closing orders, but let's assume they were opening orders. Okay, and so let's analyze it based on that to see what is going on. Here they were selling that and buying the 265, selling the 260s, and then selling the 255s and buying the 245s. And let's analyze that. Initially, it looks like it is not a condor because they were different. There were different ratios, so you have to switch this spread to a custom. And it was 8,000, I believe, on the 260s, and then 7,000 on the 265s, because this is, you have to add this one up with the other 265, the 1,200 here, and then these 1,800s are the other ones. Okay, so let's put all the quantities in to take a look at this trade in detail. So that was 8,000 and that was 7,000. Here we are. Let's unlock this to get the market prices. And here we are. Meta is at 212, so we're at this price. So it looks like if this stock goes down, there is no loss. You collect credit. It's at expiration, it's 6,800 still, but essentially there is no loss towards the downside. So the only loss on this trade is actually if Meta goes past this break even here, right here, at expiration on April 28, past 262, right? That's the only way this trade would lose, and its max profit is up here, anywhere from this range here, from 260 all the way to close to 255 is max profit. But everything else is all profitable because this is all above the zero line here. This is the profit loss. Anything above is profit. This is loss. So this here. So if we look at this break even 262, is it possible? How much does Meta have to rally to reach 262? Well, actually quite a bit, right? Let's go to the weeklies. So 262. Here we are. Let's do that. We're right here at about 212, 262. That's about 23% rally, which is possible but not as likely. And that's probably why this trade was put on. It was a trade that has a high probability of success. And yeah, so that is why this trade. Yeah, so this trade, the other reason why this trade is also very good is that the volatility is negative. And whenever earnings are done, the volatility will decrease. So this takes advantage of the decrease in volatility. And you have this very high theta here that basically caps your, helps with your potential losses. During this period, if Facebook rallies up to here, there would be a loss, but the theta would be extremely high, that by April 28, it would either break even or get close to your credit that you collected, because you collect a credit of 34 per contract here, and there's lots of contracts here. So this is the trade. It is sort of tells us that whoever put this trade on doesn't think it will rally past 262, and otherwise that's their main reason for putting on this trade, is to take advantage of the earnings coming up. And because the direction in which this price moves, either down or up, they have a benefit either way because of this. And so putting on this trade, this negative volatility trade, is definitely very clever. And that's what large institutions do. They have that buying power. This trade requires about 3 million buying power. You can watch a video where we teach you how to calculate buying power on trades. It's a very simple way. We'll put that up on this top link. If you have info cards turned on, you can click that to see that video. Keep in mind also, because volatility will decrease, it will probably decrease about 50%. Why 50%? Because when we look at the options chain, it is currently, if you look at the April 28th, it's about 109. If it was to, once earnings passes, it will drop down to somewhere between these volatility percentages. So 109 to get to 60, that's a drop of about 50%. So whenever you analyze options, make sure you put the volatility adjustments in. Like this one, you want to adjust all of these to get a more accurate picture of what will happen after earnings. Okay, so that kind of tells you what it'll look like after earnings. Yeah, so that's about it, I think. Just want to keep that in mind and go over this very unusual trade with everybody, and hopefully you learned something in this video. And if you did, please give us a like and subscribe if you haven't. It really helps our channel grow so we can keep making these analyses for everybody, and to allow you to learn as much as possible about how to use unusual options for your trading strategies. All right, thank you very much and have a great day.